This video is for educational purposes only and should not be considered financial advice. The Ichimoku for daily bias. In this video, we will be covering using the Ichimoku indicator on a daily time frame to give you a daily bias in your trading. The benefits of higher time frame analysis. If you use the Ichimoku indicator on a higher time frame, like the daily, and enter your trades on a lower time frame, you will increase your win rate substantially. Check out the following video from another trader who backtested the Ichimoku indicator 1,000 times on a variety of assets and cross-checked the daily chart with the 4-hour chart. In a nutshell, he found out that a higher time frame bias increased his win rate by about 40%. It also kept him out of bad trades and decreased his trading time. Spending less time trading and making more money sounds like a win for me. If you add ICT concepts to this trading approach, your accuracy will definitely improve. Here are some rules that I found that work best for this method. For the Kumo breakout, there must be 2 candles outside the cloud. The move must stay outside the cloud. The lagging line or Chiku indicator must be beyond the previous 26 candle. To trade the conversion line on a daily chart, once price closes below the Tenkan-sen or the conversion line, look to sell. Once price closes above the Tenkan-sen, look to buy. Let's take a look at some examples on the charts. Here we have the Euro USD. Whenever there's a line, that's a Kumo breakout. The arrows indicate moves across the Tenkan-sen or conversion line. As we can see, every time the Kumo breakout happened, we waited for the second candle, and that would have been a positive confirmation, and price moved to the upside. On this Kumo breakout, we waited for the second candle. There was a retracement, but price continued to the downside. Then on this Kumo breakout, we waited for the second candle, and price did retrace back into the cloud, and that might have been a loss. As we see here on this Kumo breakout, we wait for the second candle, price stays outside of the cloud, and you did have winning trades the next day. On this Kumo breakout, you look for the second candle, and again, you're moving to the downside. On this Kumo breakout, you wait for the second candle, and you're probably having winning trades on this day as price moves to the upside. Now, every time price crosses the Tenkan-sen line, or this blue conversion line, you'll see that next day you could have had a winning trade. And then once it crossed to the downside, again, you could have had a winning trade. As we look at this cross of the Tenkan-sen, you could have had a winning trade. But you might want to stay away from trading inside of the cloud. Here's another cross of the Tenkan-sen. The next day, winning trades. Another cross of the Tenkan-sen to the upside. The next day, winning trades. Another cross of the Tenkan-sen, winning trades. As you can see, the Tenkan-sen gives you a lot more trades and is also giving you a lot more win trades. So the Kumo breakout is a good strategy, but I would probably look to trade the Tenkan-sen or conversion line trades from a daily chart. If we're looking at this trade that happened on May 15th, let's go to a smaller time frame like the 5-minute chart. Here we have May 14th, and then May 15th is when price opens in the New York session. We see price moves to the downside to rebalance, and then it crosses the Tenkan-sen and then crosses the Kijun-sen line. You might be tempted to take a trade there, and that would be an ideal trade. And if you're feeling aggressive, you would know that we have already crossed the Tenkan-sen on a daily chart here, once price closed this day on the 14th. Then we see a cross of this Tenkan-sen on a 5-minute chart. That might be a cue to go ahead and take a trade. But if you want to be on the conservative side, you wait for the Tenkan-sen to cross the Kijun-sen line, which happens here, and you could have taken a trade there, or you could wait until the Tenkan-sen is above the Kijun-sen, and then once price crosses the Tenkan-sen line, that's an entry. Either way, you'll get your 2-to-1. If you entered here, you get 2-to-1. If you entered here, you'll definitely get 2-to-1. Let's look at one of the downside trades. We have a 5-minute chart again. This is a cross of the Tenkan-sen or conversion line on a daily chart. If we look to the next day, we see that price opens up during the New York session. It goes into the cloud and then crosses the Tenkan-sen line as it moves outside of the cloud. Now, if you're following strict Ichimoku rules, you have to wait for the Tenkan-sen to cross the Kijun-sen, and that happens here. On this candle, you have an entry. Stop loss goes above the Kijun-sen line, and then you see a move to the downside with a 2-to-1. Now, if you're using ICT concepts and counting the market maker model, we look and see that this is level 1, level 2, and then level 3. Price retraces back into level 2, comes down, creates a level 1 here, and then as it breaks that level 1, that is when we entered. And we're waiting for level 2 to be created, which is right here. And then level 3 is created right here, and that is your exit. Here is one more trade, a cross of the Tenkan-sen on a daily chart to the upside. During the New York Open, price makes a huge move to the upside with this candle. Now you might want to just measure that range and get 50% and use that as your stop loss, since this is a huge range. So you enter the next candle and you put your stop behind 50% of this large range move, and then you'll get your 2-to-1. You actually get a lot more. To recap, using the Ichimoku indicator on a higher time frame, like the daily, can definitely help you with your entries on a lower time frame. In addition, by applying ICT concepts such as the market maker model and 50% of the previous session's range or the current dealing range, you can create more accuracy in your trading and increase your win rate. If you found this video helpful, please like and subscribe for more videos like these. Also, please leave a comment if you have any questions or if you have any other video suggestions. Thank you for watching.